And hello, welcome everyone here to Ichimoku Strategies here, Ichimoku Trading. And this is Christopher here, secondphaseforex.com. Is doing a class with FX Street. Just to let you know ahead of time, I might need to end this a little bit early. I'm actually in an enormous amount of back pain right now. I tried to move my fridge on my own, which wasn't exactly the brightest idea. And so I'm obviously not as young as I used to be. But anyway, so literally moving hurts. Luckily, I don't need to move much to teach this class, and I feel pretty committed to being here with you guys. I've been doing this for years now, and I feel like this is just such a regular part of my week. So I wanted to come anyways, even though I'm in pain. And so anyways, you may hear me groan or not talk for a second. That's just my back. Okay, so let's go ahead and begin. I want to start off with a pair that I normally don't talk about too much, dollar Swiss. I want to get into it. And while I'm getting into that, if there is anybody here that is new to this, I just want to give a brief introduction. This class is built around one method, one trading methodology that has several systems built in it. That's called the Ichimoku Cloud. That's what you see on the chart here. Everything on the chart is Ichimoku Cloud except for this blue line here, which is 20 MA. So this is something I've been studying for 6 years now, almost 7. I remember when I used to work for the broker, I was studying it. They used to laugh at me. And now the funny thing about it is that my boss at one of the former brokers invited me to Hong Kong. He now runs the Hong Kong division. He invited me to Hong Kong to teach a class on it, which is kind of funny. So it's interesting how things change, but it's quickly growing in popularity, and I think that's because people are finding that it works very, very well on a lot of different levels. When it's a tool, it's like anything else. It is a tool, and if you use the tool well, it will be useful. If you don't use it well, it won't be useful. Some tools just aren't that great at all, but this one is highly effective on multiple levels, and I think it's useful. I think it's popular. I think it's getting popular because people recognize that it has so much to offer. And so we're going to be getting into one of those things today, talking about one of the main methods. We're going to be continuing from last week called the Tenkan-Kijun Cross. We're going to give some examples of that and how you can use basic price action analysis, basic Ichimoku analysis to spot the right trade, the right direction, and then from there, just drill down into the time frame or drill up into the time frame that really has the best handle on that particular trade, that particular pair, and that particular move. So that's what we're going to be looking at today. I'm going to be giving several examples of this, and I'll be giving you several examples of other possible Tenkan-Kijun crosses coming up in the near future. There are a lot on the horizon here, a lot of great trades available, and so we're going to be getting into that. If you are new or one of your first few classes, feel free to ask questions. Just put it right in the chat box, and I will get to it very, very quickly. It's open format here. Let's try and keep our questions focused on the material at hand or the topics that we're talking about at hand. But at the same time, I want you to feel at liberty to ask questions. So that's how we're going to learn it. Okay, so beginning with the dollar Swiss here, after, with the whole euro devaluing, losing a lot of ground, being in a lot of trouble, one of the benefactors of this has been the dollar Swiss. Euro dollar goes down, dollar Swiss tends to go up. If I was to step out for a second on the daily chart, we can just kind of see how the dollar Swiss has been doing quite well lately. It's been climbing quite a lot, pretty much since the start of this year, and it really hasn't looked back since then. And so it recently found a high just shy of 113, but it's been very, very bullish as of late. And so, we feel confident that the dollar Swiss is probably going to continue its long ways. So we start drilling down for some possible trades. And one of them that I like is a potential Tenkan-Kijun cross. And I'll explain why I like it, and we're going to go through several time frames, several levels to talk about why I feel this is a good trade or a possible good trade coming up. As you can see, dollar Swiss gapped on the open, eventually filled that gap, came back down, and then when the euro dollar started to sell off, this thing started to rise again. Now, instead of running into some heavy sellers, it pretty much just kind of has gone sideways since then. So, what does that mean? It means a couple things. Does it mean that the bulls are still in control? Not necessarily, but they haven't given up control. If they had given up control, we would start to see much lower highs and lower lows, and we would start to see the down moves, the moves to the downside, have a much more dramatic effect than the moves to the upside. And we're not quite seeing that yet. We're seeing small hints of it, but the end result is the numbers haven't really found any lower ground. Ironically, even though this thing has formed a base here, it also seems to like this little Kumo here as support. It's now used it as a rejection, and then it sat right on top of it. And so it seems to want to use this as a base. Now, why is that significant? Well, it's significant because, for those of you that have been here a while, you know that the Kumo represents support and resistance. For those of you who knew, that's what this Kumo represents. On that time frame, on this particular time frame, the Kumo represents support and resistance at this time. Or on, at this time on the 30-minute time frame from this current candle all the way on out. As we can see, it's very, very thick, suggesting that, hey, this thing has got a lot of support under it, which is that thick Kumo. So it's treated the Kumo as support, and the Kumo came in very handsomely where the base is. So this is all very good to start off with here. If the sellers had also gotten in control, we would probably see movements down into the Kumo, but we're not seeing that. We're seeing the Kumo bolster support, bolster this pair up, and push it up. So we know that the bears are not in control. Are the bulls fully in control? Not quite. They haven't really reestablished control, but they were the last to be in control, as we can see by this very strong up move, which has yet to be countered. So the bottom line is, bulls were the last ones to really have the momentum in their favor. Therefore, they are best positioned to continue to take control of the market and drive the prices higher. And ironically enough, we're seeing that potential setup here with a possible Tenkan-Kijun cross. For those of you that are new, a Tenkan-Kijun cross is a simple crossover of two lines. The white line crossing over the red line. The white line is the Tenkan, and the red line is the Kijun. This is often referred to as a TKX. Or that's what I refer to as TKX. And so this Tenkan-Kijun cross is possibly or threatening to happen to the upside, which is a bullish cross. Now, with a bullish cross, it depends on where the cross happens in relationship to the Kumo. For those of you that are taking, that have been coming to this class for a while, I generally only recommend medium to strong crosses, and I will briefly explain what that is. And I'll explain why that's lining up here on this one here. In my advanced course, I do teach weak crosses, but that's a proprietary system only in my advanced course. So for everybody else, I recommend, unless you have the method in place, I recommend taking medium and strong crosses only. It just makes it a little more probable that you're going to be finding the right crosses. So, a strong cross is when we have a bullish crossover above the cloud, and a medium cross would be inside the cloud. If this thing were to push up to the upside and cross to the upside, then it's very, very likely that this cross is going to happen above the Kumo. Now, from last week and the week before, I've said one thing about Tenkan-Kijun crosses. Does anybody remember what I said about Tenkan-Kijun crosses? That one of their characteristics happen in relationship to support and resistance. Does anybody remember what I said about that? Who remembers that? Putting this question out to you for those who've been coming for a while. So Tenkan-Kijun crosses happen. Anybody remember whatsoever? Wow, nobody remembers? Wow. This can't all be new people here. Shoot, if nobody remembers, nobody's listening. I don't need to teach this class. That's fine. Nobody wants to listen, that's okay. Wow, nobody remembers how Tenkan Kijun crosses happen in relation to support and resistance. You have a bad memory. That's a good excuse. That's definitely an excuse for the 40 some odd people in here, especially those who have been coming for a while. I was not here. Okay, that's good. That's not bad. Wow, everybody's getting good at giving excuses. Wow, nobody remembers this here. Nobody whatsoever. Boyke doesn't remember. Happens before the trend starts. Okay, I wasn't just suffering from back pain. So for Annie, there you go. So it's exactly how it happens. These Tenkan Kijun crosses often happen before we clear, before the trend starts. That's actually part of the answer. The other part of the answer is they happen before we clear, and please remember this because I'm going to quiz you sometime later on, is that they happen before they clear a final support and resistance. So if the trending move is up and then it's going to start another trend move, you will oftentimes get that next cross in that direction before you clear the final support, or in this case resistance. So remember that key point. Why is that a key point to be remembered? It's something you want to remember because if you are looking at trading in the traditional support and resistance way while using the Ichimoku, you might wait to take that trade until after it's cleared the resistance. The problem with that is that after it's cleared the support or resistance, it may have A, moved a lot, so you'd be far away from the original entry, B, you're increasing risk, and, that is kind of a problem. I mean, what happens if the support was 200 pips away? Would you really wait for it to clear that? You could have missed an entire move in that entire time period. It is very often the case that Tenkan Kijun crosses, if continuing in the same direction as the last move, will often start another Tenkan Kijun cross and another trending move before you clear that final support and resistance. So don't feel like you have to wait. If the signal is good, the signal is pure, everything else is lining up, price action supports it, then you want to take it. So this cross is a leading indicator. Why would it have to be leading? It doesn't have to be leading. Leading is simply the indicator's relationship to price. But just because there is some future support and resistance doesn't make it a leading indicator per se. Leading is really a simple technical reference of how the indicator relates to price itself. The future support and resistance levels, the above support and resistance levels, aren't necessarily factored into that. And Harley's saying, well, you mean it's happening faster than most indicators? There are actually other indicators that may be turning faster than this. But, so the turning is not necessarily the important point. There's many indicators that turn. Oscillators do this. This is what they do. CCI, stochastics, MACD, they all turn. Depending on how those are configured, they may turn faster than this, they may not turn faster than this. It's not the turning part that's important, really. CCI, more than likely, a 20-period CCI is going to turn faster than this one will. But it's not the turning that's the most important. Because if something turns faster than the other, does that necessarily make it a better signal? No. Because there are many turns that could fail. CCI could turn and it could fail. Stochastics can turn and it could fail. So the turning is not the most important point. The most important point is that when it turns, it gives you a very good signal. That's the most important point. Is it qualifying those things? And so what you're saying is, well, that you don't have to wait for further confirmation. Not if all the confirmation is already built into it. And in this one, if it were to give that, it would kind of have some of that confirmation built into it. It really depends on each individual situation. Ideally, you want all that confirmation built into it. We kind of have that here. We have at least several other confirmations. We have the Kumo as support. It's acted now twice as support. We have the price action, which has yet to really, shown that it's been taken over by the bears or the other side of the market. it's just kind of hanging up in a flag type range. So we have two other things that are kind of confirming it. So in terms of additional confirmation, I'm not really, at that point I wouldn't really need much more. I would take it, and, if I lose, that's fine, because I trust that more times than not it's going to win when I have these things in place. Now, Haribo, I apologize if I defamated your name there. Can I explain why this Ichimoku strategy works? Wow, that's a loaded question. Okay. How could I say that's actually quite a developed question. I'm not sure if that's necessarily something that could be answered very easily, but I'm going to give it a shot here. I'm going to try and condense that answer, because honestly, that could be 50 classes if I really wanted to explain why it works. But let me get into some of the main points about this. Why does Ichimoku work? Well, by its very nature and construction, it has a lot of pre-qualifiers in it. It does a lot to kind of filter out signals before it actually gives you a signal. You got to remember, the person who invented this was Japanese, and he came from a much more conservative, traditional trading background, where they're not as addicted to day trading, and they're not as addicted to, they don't feel necessarily the need to trade every single day like most Westerners do. They don't feel like they have to necessarily make a trade every single day to feel like this is worth doing. They're quite comfortable with not making a trade in a day. Why? Because to them, trading is not about the action. The action's really a byproduct. Trading's not about the action or the excitement. They're not worried about watching moves. To them, trading is kind of very much like the same thing they treat in terms of samurai sword fighting. They want absolute precision. And if they have precision, they are more than likely going to be more effective at trading than if they are kind of doing the shotgun method. They try and do the sniper method. So the difference between a shotgun and a sniper rifle is a shotgun actually has a wide range spread when it fires some ammo. And through that wide range spread, it's more likely to hit its target. Remember, the Japanese, when they invented the sword, they didn't invent the medieval knight sword that actually has blades, a blade on both ends. They invented a sword that is much more thin and precise, that is the most effective killing sword that has ever been created. It wasn't designed for 10, 20, 30 hits, even 5 hits and somebody goes down. General samurai sword fights were less than 5 strokes. Very rare did they go beyond that. And that's because to the Japanese, precision is everything. And that element carried over into what we call Zen design. Like if you think about Zen furniture, Zen interior design, it's very simple and it's very precise. Everything is contained. And that energy, that influence, that culture thing is carried all the way into its trading into the Ichimoku Cloud. So the Ichimoku Cloud doesn't shoot for making hundreds of trades. It doesn't shoot for that. The inventor of high-frequency trading wasn't some Japanese guy using the Ichimoku Cloud. That was a Westerner. And so the whole idea behind the Ichimoku Cloud is to filter out as much information as possible so that when we give a signal, it's more likely to be more accurate. Japanese traders would rather trade 5 times and make 500 pips than trade 20 times and make 500 pips. It's just more efficient that way. And so that is part of the reason why this method is very effective in the markets, because it filters out a lot of things ahead of time. How does it do that? One of the things is this gigantic blue thing you see here. This is the Kumo. So this Kumo is designed to represent support and resistance on that time frame that we're using. And so by giving us information about the market, telling us where support and resistance levels are, telling if we've cleared it or not, all these things ahead of time, we're filtering that out ahead of time. So that's very powerful information. The other thing is the Tenkan and the Kijun. Those are filters in and unto themselves. And so they kind of communicate to us the momentum, which is what the Tenkan's really trying to do, and the Kijun's really trying to communicate where is the trend in the market. And so that all becomes very, very powerful information. So on the short note of your question, really, part of the reason why Ichimoku is effective is because it aims for precision through filtering out a lot of false information. In other words, something has to really earn itself as a signal to get a qualification as an Ichimoku signal. Whereas things don't have to work that hard to give you signals on, a MACD or a Bollinger Band or things like that. It's not too difficult. So hopefully that answers your question. All right, fractal is a good question, and then I want to get into fractals, hairbos, and then I want to start getting some examples because we have a lot to cover here, and I think there's going to be a lot of moves coming up. Fractals says occurs. Sometimes the Tenkan Kijun stays for some periods as only one line before separating. In that case, when you consider as a cross, when touches or when separated, by definition, a cross is when they separate. You will see that phenomena that the Tenkan and Kijun will stay married to each other for several candles. What to do when that happens? Because this is a very, very important and legitimate question. What do we do when that happens? And you could go traditional on this one here. And you could go traditional on this and say, look, until they separate, it's not a signal. One other way to do it is to look at it in context. And one of those contexts would be, well, what's the angle on the Tenkan and Kijun at that time? Are they flat or are they climbing or falling? If you can measure the angle and the angle is sharp enough, 30 degrees the minimum, 45 is better. But the sharper the angle, the better. If it's flat, then I would definitely want to wait for some separation. Why would the angle be important? Because you got to remember that the Tenkan is a price action line. It is also designed to gauge the momentum. If it's moving flat, then it's telling you, and it's been doing it for several candles, it's telling you that the momentum is flat. If the Kijun is doing that in combination, it's telling you both the momentum and the trend is flat. Now, for one candle is not that big a deal. For several candles is a big deal. The more candles, the bigger the deal. Now, contrast that with the situation where they are married, they're on top of each other, but there's a very strong angle to them. Generally, when there's a very strong angle to them, if the price action is in support of that move, or it's kind of confirming that move, then it's really only a matter of time before they separate. So those types of situations, I tend to be much more lenient in looking for the separation. However, if it's flat, then I'm definitely going to want to look for a separation. So hopefully that answers your question there. In terms of how to measure the angle on a fixed way, it's very simple. Depending on your charting package, some charting packages allow you to have a fixed scale. In other words, when you change from, you zoom in or zoom out, it will keep the scale proportion all the way to do that. My chart does that. So that's how you can determine whether the angle is legitimate or not. So hopefully that answers your question. Okay, last question here, and then I want to get into a lot of these pairs that are moving here. How do I combine Ichimoku with fundamentals? I generally don't. I generally don't. There are some major fundamental situations that I'm watching that I'm concerned with, but for the most part, I would consider fundamentals more of more of like how could I say, an aircraft carrier. Aircraft carriers take a long time to turn, and it's kind of the same thing with economics of that country. I'm really concerned about the long-term direction of that country, that aircraft carrier. If there's a possible situation where it might be turning, I'm concerned. If it's unlikely that it's going to be turning anytime soon, then I'm really going to stick with whatever direction that aircraft carrier, that economy is going. For example, Europe, the ECB, the IMF, and the EU, they basically did a Vegas-style all-in type move. they put their chips on the table. They pumped in just under $1 trillion. It popped the euro 2 cents, and where is it now? Lower than where it was when that whole thing happened. So, the bottom line is that people still realize, hey, there's still long-term problems in the euro. Does this solve it? No. Did it solve it for the U.S.? No. The U.S. still lost a lot of ground. The economy still suffered immensely after we put in our TARP. How much more did the Dow lose after that? It had a big day of rallying, and then same thing all over again, started to sell off. So bottom line is that just because they pump $1 trillion in the economy doesn't mean it turns everything around and that's it. It takes a while to turn an economy around. And so, once it's already pointed sharply in one direction, that's all I really need to know. So that's how I combine Ichimoku fundamentals. That's how I combine fundamentals with everything that I do. That's basically it. There may be a short-term event that may have, and when I say short-term, it better be darn important. Like, oh yeah, they're intervening kind of thing or something like that, or they're changing policy, monetary policy. Other than that, I could not tell you what one report came out after another. I couldn't tell you, and I really don't have any interest in reading that. My trading does fine without that. So, that's my thoughts on that and fundamentals as a whole. Okay. Need to take a sip of water here, and then I want to go into the dollar Swiss. Hopefully that answers your question there. All right. Oh, that hurt. Good God. So we got the 30-minute. We have a potential signal here. Now, what would negate this or make this less interesting? If I see the price action making deep into Kumo territory, if it starts making 50, 60, 70% in, then it's now penetrated very deep into some support levels. I'm going to let that thing slide for now and just say, hey, I'll wait for the next signal around. But let's see some other time frames, and let's see if we have anything else that is interesting on the dollar Swiss. One of those things we have to look at here is the thing did have a big sell-off from a few days ago. What is interesting when I do pull the fibs from that, they match up very nicely with where price has been stuck lately. It's been stuck between the 50 and the 61.8. So if the sellers are going to come in, this is kind of the last area for them to really make a move. This is the ambush zone here. This is it. So if they're gonna make their move, they're looking for between the 50 and the 61.8. Beyond that, they're generally not thinking 78.6 or whatever the next one up is or the one after that. This is their final levels that they're looking at. If not, then they're going to wait till way back here before they consider another attack. So this is kind of interesting. Should it slip out of this range to the downside, well then I'll let that 30-minute signal go. But should it start to move to the upside, that just confirms it and it suggests it's got a lot of upside and very low downside risk. So once again, we're kind of seeing that there's some nice little play on both sides for the dollar Swiss. If I go up to the 4-hour, we also see that there's some other interesting things. It's like all the charts are kind of showing the same thing. On the 4-hour, the Kijun is lined up perfectly with the fib. That's as pretty as it gets. So, and you got the 20 MA, which has now survived 2 touches and rejected it since then. So, for people who want to be bearish, if this thing breaks to the downside, it's going to need to clear the Kijun and it's going to need to clear the 20 MA to do that. You know that because it's tested these and it's rejected within these here. So, for bears, you're going to want to watch this here. For bulls, it also means you also got a very qualified support here. So there's really a lot, it's really at a very interesting price level right now. It's really got options on both sides. This is one of the situations where really both sides are viable. What is also interesting to note is that this thing may produce, and I mean may, there's a decent cloud formation for it, for a potential Tenki Kijun cross to the upside. So keep an eye on dollar Swiss one here. This one's on my hit list. Okay. Oh, excuse me. I have to get to my notepad here. You'd never think moving a couple feet is difficult, but it is. Okay. Aussie dollar. And I want to look at Aussie dollar. We're going to look at Aussie dollar, Euro Aussie, Dollar-CAD, Euro-CAD, and if we're lucky, again, the EU and dollar yen. Lots to cover. Okay. Aussie dollar is kind of the opposite of that chart. It had a very, very big sell-off. And then after that sell-off, Not sure if this matches up here. Kind of does, kind of doesn't. Sort of does. This is pretty decent here. Went a little bit past it, so I'm not really super excited about it unless we take it from here. Ah, that's a little tighter. Okay. So Aussie dollar is kind of in a strange situation. After hitting the 61.8 from this move here, it found support at the 20 EMA here, also the 50 fib here, found support at the 38.2. Should we start to see a 4-hour close below the Kijun here, then other than filling this gap, it seems like this thing might be headed back down to this 8,800 base and then possibly down to 8,750. And it's also threatening a potential Tenkan Kijun cross to the downside. So the Kumo is thick enough, it's clear enough to possibly offer that. Just keep that one on there, on the books. So that could be happening, anywhere between, the Kijun break could happen anywhere in the next 1 to 2 candles, and the Kijun cross could happen probably sometime before the one in session. So that could lead to a potential move. There's a good 200 pips between current price and the full wick at the bottom here. And then on top of it, we also have, the Tenkan Kijun cross, which could keep sending it further. That could be sending it for a very large move. So keep an eye on this one here. There's a lot of potential riding on the Aussie dollar right now. It's been so strong for a while, and then now it's showing a lot of weakness in the near term. Okay, with that being said, I want to take a look at Euro Aussie. Now, generally, when you're trading, you want to be trading what is called strong against weak, or weak against strong. It's the best situation you could possibly have. It's where the forces are most polarized. And so that's what we're looking for. We're looking for strong against weak. In this case, it's not that the Aussie is super weak, but it's just weaker than it's used to be. It's used to be very, very strong, incredibly strong. And even when the dollar was rallying against everything, the Aussie was holding its ground. It dug its feet in the dirt and it was holding territory. But lately it's been giving up that, mostly because of the whole risk aversion thing. So there's heavy risk aversion in the markets, so go the heavy yielders, and the Aussie dollar is one of them. However, even despite all that, even despite the Aussie dollar shedding several cents from its highs, the bottom line is the euro is that much weaker. And so we still have something very clear in place with the Euro Aussie here, which is that both the 20 EMA and the Kijun, more specifically, likes to reject boom, boom, and boom. 20 EMA here as well, likes to reject this. Now remember, the Kijun Sen really stands for trend line. That's what it stands for. And if the trend is consistently in one direction, the Kijun should contain that. That's what's been happening here. Now, this isn't a perfect all red candle trend. It's got a little oscillation here. That's fine, because this gives us chances to get back in this move. So you can use the 20 EMA, which is very close to the Kijun, or you can just use the Kijun itself, put your stop a little bit behind it, and that's it. Until that changes, until we get a close on the other side of the Kijun, this trend is still in play. How did it respond after 2 days of the Aussie selling off and the euro getting bought up? Ran to the Kijun, slammed back down. So this gives us a very clear trend environment. This gives traders plenty of opportunities to get short in it. And the Kumo is confirming it. The Kumo really has not changed trajectory. It's still relatively thick. It's relatively consistent. So anytime we get a 20 EMA touch on it, make sure you're paying attention to it and look to short it there. Great reward, low risk. I mean, the last Kijun touch, the Kijun was at 43.93. Here we are at 41.60. So plenty of profits and pips to be had on that one there. Keep an eye on this one. Don't take your sight off this one here. Until that pattern changes, it's still in play. Okay, and also along with the Euro Aussie, we'll get into this one in just a second. I want to talk about Dollar-CAD. Okay. All right. Ooh. If I dive in, I think it's already happened. Let me see if I can maximize this. Oh, it's already full zoom. Okay, so it looks like the Tenkan Kijun cross just happened inside the last hour. Okay. Yep, they're separated within the last hour. So I was hoping it would wait, but it happened about an hour ago. So in some sense, is it possible you can still get into it? Very likely. It seems like there's something else holding this thing up. Aha. So the S1 pivot, boom, 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 and right here, boom, is holding this thing up right now. So keep an eye on this one here. If we get an hour close below this S1 pivot, seems like this thing's going to go further to the downside here. The 102 is holding it for now plus the pivot. But we got this immensely thick Kumo. We got kind of like a dollar switch situation. The thing sold off, and then it's been hovering down at the lows there, suggesting probably likely further downside weakness. So, keep an eye on this Tenkan-Kijun cross. It has kind of the elements in place. If I had to choose out of the CAD pairs which one I want to be shorting, well, I wouldn't choose. I've already shorted it. It would be this one, Dollar-CAD. Let's talk about why. I talked about it, I believe, last week, where I said, hey, keep an eye on those 20 MA Kijun touches, because those are just sell opportunities. And it happened again, and then boom, boom, boom. It gave you 3 chances to do it again, and now the thing's gone. So, this is one that, if by some chance, it gives you another chance on the 20 MA touch, then, look at that as a potential trade opportunity here. It goes along with the Dollar-CAD. The euro is very weak. CAD is very strong. They've said in their last policy meeting that they're probably going to be raising interest rates soon, that the only thing that's actually hurting their economy is the strong CAD. Other than that, housing's up, employment's up, everything's up as a whole for them. So you have now a situation of strong against weak. And so this is kind of the ideal pairs to be shorting. Forget about the ones that are kind of mixed right now. Look at the ones that have the biggest polarity between them, strong against weak. And in this case, we have that. Dollar-CAD is one of those. If you haven't been paying attention to Dollar-CAD, what were you paying attention to? Was it strong against weak? I hope so, because this thing's been offering you golden opportunities to really make some money on this one here by trading in the same direction. This thing has yet to really close above the Kijun in quite some time. And again, as I said before, Kijun stands for trend line. Kijun Sen is trend line. So if it holds that Kijun, the trend is still intact. Is there a way to get into this? Let's take a look at some smaller time frames and see if we can find something. I'm short a little bit higher than this, thank God. And there's nothing on the 4 hour. That Tenkan-Kijun cross happened way back here at 133. Let's try the 1 hour. Nothing on the 1 hour. This Tenkan-Kijun cross happened at way up here at 3250. Now here's a really good example. Here is a really good example of the two lines being on top of each other. And we know they're on top of each other because if I put the display data box up, the ST is the Kijun and the TL is the Tenkan line. They have 3282 and 3282 as the value. Here, 3266 and 3266 is the value. Here, 3249, 3249. Here, they finally separate. So you could have waited for a separation way over here. Well, that's 50 pips later than it was way back over here. You would have been missing all that. Did we really need to have this thing separate to do that? This is where I don't mind flirting with the rules a little bit. The angle is incredibly strong. We've had 1, 2, 3, 4, 5, 6, 7 red candles straight being bearish in one direction at the time that they come together. The next candle is the 8th, and the angle is still sharp. Do I really need any more additional confirmation? I hope not. At that point, we pretty much got all the confirmation we need. So we don't have to wait for the crossover. We can get in back up here instead of waiting for it to separate way down here. And that was way back at 3200, 3250. Here it is, 2973, 275 pips later. So this is a beautiful example of how you can how you can relate to the lines being on top of each other. This is one of those that you'd want to take advantage of. Okay, is there a time frame that we can get in? Try the 30-minute. 30-minute has the potential to give us a signal. After selling off massively, kind of consolidated, produced new lows, re-challenged, and now it's back here. It's stuttering a little bit. It's making ground, but it's stuttering. So it's not It's not quite a workhorse, but we've had 3 red candles that wiped out 1, 2, 3, 4, 5 candles of gain. So if we can get a nice close below all this here, then you'll probably see more downside. However, should it kind of stutter a little bit more, maybe there's some profit taking before another round of selling, maybe they want it to pop back up and sell higher, then look for an upward Tenkan Kijun cross, and then for the thing to cross over back to the downside for another Tenkan Kijun cross to the downside. So keep that in mind there. There is definitely some very strong potential for another strong Tenkan Kijun cross there. Kumo's stick trajectory is good. It's got most of the elements in place. It may not give it to you. Your last chance recently to get into this was a pivot, which is where I was getting it at. So that's actually very much what Ed was saying about the breakout pullback. And so in many ways I completely agree with him. So keep an eye on Euro-CAD on a 30-minute time frame there. Okay, I have enough time for EU and then dollar-yen, and then I'm going to wrap it up. It's unfortunate my massage therapist can't get here for a few days, but that's part of the deal. Okay, Euro-dollar, 4 hour. Okay. So here was, and if you all remember last week, I was talking about the Tenkan Kijun crossover that happened right during this candle. That Tenkan Kijun crossover produced a very nice 600 pip move with almost all red candles the entire way. Now since then it popped back up. Did it pop to a fib? That would be interesting. Pretty close. Maybe a slight overshoot, but it got there. So it kind of hit a fib and then started a massive sell-off after that. Now, is the Kumo trajectory still solid? Decent. It's holding sideways, mostly because of this sharp move. It kind of had to stall because of that. But it's still sick. So that means it could still act as some sort of resistance. Does that mean we have the potential set up for another downside Tenkan Kijun cross? Yes. Keep an eye out for a downside Tenkan Kijun cross on this one here below the Kumo. It may give you one before this here. It may not. We also have to keep in mind that 125 is on the horizon. So you're going to want to take your first half of profits before 125, 15, 20, 30 pips before. Bring the stop to break even if you get a signal, and then hope for a break of 125. But this could be the beginning chapter of another move to the downside where this thing attacks 125 and maybe beyond. And is there anything on this? I think there's one on the 30-minute on this one here. Yeah, keep an eye on this one here too. It's stalling at this pivot Kijun here. Trajectory in the Kujon's beautiful. It's the same story on many of them today. Very good Kijuns, very good Kumos on this one here. Look for a Tenkan Kijun cross to the downside, and then boom. So this could produce a signal. It probably won't give you a signal though till Tokyo or early London. So keep an eye on that one there. And then last one of the day. Hopefully it's the last one. My back is killing. Dollar-yen. So, dollar-yen has shown a great deal of resilience as of late. It's been, after getting hammered by the whole, risk aversion thing going, Europe, Greece, all those things. It rebounded very, very well and has been holding some very strong ground to the upside. And what is interesting, let me clear this up a little bit, is that in its first penetration into the Kumo, it really didn't get that far in. Getting into the Kumo a little bit is not that big a deal. Getting into the Kumo a lot is a big deal. So when it makes deep penetration into the Kumo, that changes the game a little bit. It means it's eaten through a lot of the support or resistance, depending on where the Kumo is. In this case, support. It's eaten through a lot of it. But after kind of a mild pullback here, this isn't impulsive by any means, mild, it's starting to find some upside swing here. So if that should continue, keep an eye on a Tenkan Kijun cross here. It could produce a nice little signal and clear this little hurdle here at 93.50 and reattack 94 and just shy of 95. So keep an eye on that one there. There is some serious potential for a really good Tenkan Kijun cross on the dollar-yen. And so I've been talking about this one for a while. I think it's going to eventually find 95 in the near future. I think its next moves are probably more up than the downside. Even with the Dow selling off, it's rebounding quite nicely. So that is what I got for the list of today. If anybody wants, I have enough time for one or two pairs. If you want to look at a pair, you have to list the pair and the time frame, please. GU. Okay, what's the time frame, King? Anytime you list a pair, list the time frame. CAD Swiss. Good God. All right. Are you from Canada? Want to know why you're thinking CAD Swiss? I rarely get a request for CAD Swiss. So it's a rare one, but I'll definitely look at it. You're number 2 on the list. Let's do it. GU. 1 hour. Kind of a mess, actually. Let me pull up pivots for a second, but kind of a mess. Why is it a mess? Well, for one, we're inside the Kumo, so it's a mess. 2, this thing's kind of ponging all over the place here. After a pretty strong sell-off yesterday, petering up, Europe, it comes up, gets rejected, comes back down, bounces, comes back up, and then gets rejected. Not really much to say from an Ichimoku perspective, other than we're in the Kumo right now in the 1 hour time frame, and we probably wouldn't want to take any trades inside here. So that being said, I wouldn't want to take any trades inside the Kumo. I think this is, I don't think the 1 hour time frame is really good for it. It could produce a Tenkan Kijun cross signal to the upside, but it's already spilled out to the downside of the Kumo, so that would technically negate this one here. So, not my favorite right now. I really don't have much to say about this. Honestly, I would stay away from the pound for today. That's what I'd be looking at. That's my thoughts on that one there. All right, CAD Swiss 1 hour. Do I have CAD? I hope I do. I do have it. I had to ask the question because I never look at it. CAD Swiss 1 hour. Ooh. Honestly, I think you're relatively good buying CAD anything right now for the most part. I mean, I'm not using it as a blanket statement, but I think CAD is just going to be strong for quite some time. There's anticipation of a rate hike after the last one. 2 back-to-back good employment numbers, and we're seeing that reflected in the price here. I mean, look what's happening with this thing here. This is just almost all blue candles, a little bit of starting right at the previous high, and then boom, we broke right through it here. So this is nothing but net, as the expression used to go. It's all bullish. Super thick Kumo. Kumo's rising. As time goes on, that will add support. And so, if you've missed this breakout here, let it climb a little bit, see if it comes back to the 108.50, because this is a pretty darn good support level here. Or I think will be a good support level. And the Kumo's rising to it. So in the future, the Kumo and that support should come together if you get a nice retest within the next, I don't know, by tomorrow, maybe mid-New York, or even the day after. Could be a good little playoff there. But it looks solid from this perspective. It looks good. I wouldn't want to be anything but long CAD Swiss right now. In fact, pretty much CAD anything. It's probably one of the hot pairs right now. So hopefully that answers your question. Wow, more CAD stuff. Good thing is you guys are focusing on CAD. Hopefully you're focusing on the right side of CAD, which is long CAD. Oh, that hurt. Did you want 1 hour? Is that what time you want? CAD, pound CAD 1 hour. Okay, good. Well, momentum's still good from the Tenkan perspective. This thing is still contained from the 20 EMA. I would only, on this one here, I'd only want to be long CAD, so short pound CAD in this one here. It's a little bit wily though. This doesn't turn the corners very pretty. This is kind of this thing will skid a lot. It seems like 52.29 is a decent price level. That's probably your best price level to be shorting it. The thing is that it did find, after finding a bottom here, it found 2 strong bullish candles, so it's going to need to clear this, I think. I think your best bet is either wait for this to clear on a 1 hour time frame and close below it, or wait for this here. But that would be your best bet for right now. It's a little bit tricky. It's not my favorite formation, and understandably so. It's a little strange volatile pair. And let's see. Okay, 2 minutes ago we have a preliminary. Okay, so I gotta get going. So that's the end of this one here. So I want to thank you all very much for coming. It was great having you here. Thanks for enduring my back pain and everything like that. If you want to learn more about Ichimoku, I have a bunch of free articles on my site, videos as well. SecondSkiesForex.com. I also have a course, an advanced course where you can learn proprietary setups that I use every single day on this one here. Check it out on the website. You can also email me, info@SecondSkiesForex.com. Other than that, stay tuned for the next one here. I bid you all adieu. I'll see you next week. And good luck trading this week. Take care, everyone.